Start the recording. Now these calls are all recorded, so we do keep them in our website. So if you ever wanted to go back and see any of the archived calls, all you have to do is go to mortgagecoach.com, and then when you get there, hover your mouse over the community button here and choose Coaching Call Archive. And when you do that, you'll see that the Tuesday and Thursday calls are all listed here. And we try to give you as much as we can in terms of what they were about, but these are all hour-long calls. Feel free to explore these at any time. There's lots of great ideas in here that you can definitely benefit from. All right, so first things first, I want to kind of gauge the audience for today. I'm going to launch a poll that's asking you how many TCAs you've created. Have you created at least 5 TCAs? I'd like you to respond, please. I'll stop the poll once we get to about 70% voted. And if you haven't, it's okay. Don't feel bad. That's what the training is for. So we just want to make sure that we're addressing the right questions here. Give me a little bit more of a push. We got about 42% voted. All right, we're getting up there. Just a bit more, guys. Anybody who hasn't voted yet, please vote real quick, and then I'll go ahead and show the poll results, and we'll get started. All right, excellent. Thank you very much, everybody. Okay, so you guys should be seeing the results here. It looks like 38% of you have created at least 5 TCAs. Congratulations on that. 54% of you know, so a lot of brand new people in here. And then 8%, what in the world is a TCA? That's great feedback. So we'll make sure and get that addressed. So it looks like a majority of the people in here are pretty new users, so I'm going to do my best to help you navigate the Edge Wizard and try and show you a couple of tips and tricks to make it easy to knock out those first 5 TCAs. All right, so let's get back into Edge here. So the first thing we're going to cover, because we have so many new people on the call, I want to go through the settings real quick and just make sure you guys all have your settings in place, just so you can ensure that your reports look right when they come out. So when you first log into Edge, and you log into Edge at https://edge.mortgagecoach.com, that's always going to be your link. So it's always a good idea to save this one to your favorites or bookmark it so you can easily get back here. And it looks like a lot of people are saying they can only see the poll screen. My apologies, guys. You're absolutely right. Okay, hopefully this gets you back in place here. So what I did is I went through basic contact information. I discussed images where you need to upload them. And again, my apologies, guys. I know my screen wasn't showing there. You have product and fee templates that allow you to, and actually. Okay, good, Jim. Thank you very much for the confirmation. Yeah, I'll start over on that. I know there's a couple of brand new users here. And you guys, if you need to jump off the call at 10 o'clock, I totally understand, but we'll continue it about 10 minutes late to make sure that we cover all the content today. So contact information, as we discussed earlier, just make sure you understand that if you do change your email address / login name, it's going to change your login name for Edge. You want to make sure all your contact information is filled out right here. When you get to your images, as I said before, if you're in an enterprise agreement, this one is probably grayed out, so you may not be able to change that. That's good to go, though. But make sure you get your headshot in there, and make sure to select the appropriate equal housing logo. Now, product and fee templates. Product templates are the global templates. These are the ones for the entire loan scenario. So what I was talking about earlier when I was telling you that my product names were really verbose, that's what I mean. I'm drilling down to exactly what this particular product looks like, and you can see that I drill it all the way down so I understand what it is. Now, these product templates can include fee templates inside them. So fee templates on their own are great because you want to have those available so you can pull them down at any time. But this gives you the ability to pull down an entire product, including the fee templates, including the monthly costs. Stephanie's question real quick, how did I get to these screens? So these screens you get to by clicking on the settings button up here in Edge. And it'll start you off on the contact info page, but you can navigate through these tabs in order to see what you need. All right, so these were the fee templates. Now, fee templates, if you haven't created them yet, the easiest way to start creating these is go and grab a fee worksheet from one of your closed loans or a GFE from one of your closed loans. And you're basically just going to start entering line items here, and then you're going to indicate how much those fees are. You want to make sure and indicate who's selling or who's responsible for the fee, and then whether it's an APR fee or not. Now, most times on purchases, you're not going to add anything to the loan amount. This will actually increase the amount financed if you check these boxes. Usually, you're only going to use this for refinances. Now the last part, PPE, this is prepaid escrows. These are things like your hazard insurance reserves and tax reserves, mortgage insurance reserves. These basically get excluded from the total cost comparison because we don't view them as a cost of doing the loan. Rather, they're just a cost that's associated with reserves. Now report templates, this is what I was talking about earlier with your disclaimers. Let me scroll up just a tad. As you can see, each one of these report templates is separate for each report. So you'd want to make sure to update your disclaimer language down here. That's our default. And when you update yours, it will automatically appear on all of your presentations. And it looks like Candace is telling me it's still showing contact info. Can I get you guys to verify real quick that you're seeing the report template screen, please? Candace, you may have run into a little bit of a slowdown on GoToMeeting, but if everybody else, if you could verify what screen you're seeing, please. And Betsy's seeing contact information. Julia's seeing report template. Okay, so it looks like we got a couple of people seeing different things. Majority of you are seeing report templates. Good news. Okay, so hopefully GoToMeeting will catch up in just a moment here, and you guys will see the same screen I am. Sorry about that, Candace. Hopefully that will catch up for you in just a second here. Okay, so here is the extended disclaimer I was talking about. Remember, for each one of these presentations, they all have the ability to have an extended disclaimer. And when you click on that, you've got plenty of room to put all your additional licensing information in here. You can talk about basically whatever you want. You've got a good chunk of space for this. And I'll show you what that looks like. All right, cool. So I'll show you what that looks like when we get into preparing our total cost analysis, which, by the way, for the 8% of you who said, what in the world is a TCA? A TCA is a total cost analysis. The total cost analysis is actually, it's going to be your bread and butter report. This is the one that allows you to put loan scenarios side by side so that you can compare the long-term ramifications of each type of loan that you're quoting. All right, so each one of these individuals can have its own extended disclaimer. So as you go through these, make sure that you fill out not only the disclaimer at the footer, but the extended one if you'd like to include it. Now the account tab, that was for those of you who have a recurring payment. If you ever wanted to change your billing information, the credit card that's associated with the account, click on the account tab and you'll see a button that will allow you to change your information there. It'll also show you when your next payment date is so that you can be aware of that in case you need to move funds around to make sure everything works. I know I have to do that on occasion. And then the last one here, this is click to call. This is the one I was discussing that allows you to put a button in the top right corner of your presentations to allow your borrower/viewer to immediately get a hold of you. So this is a lead capture tool. Now generally you want to use this on marketing reports. So if you put out, say, a cost of waiting analysis or a move-up buyer analysis, that's where you want to use these buttons because you're probably going to put that particular report on your social media sites, on your website. All it does is it makes it a little bit easier for that borrower to get in contact with you right away. Now, as I discussed earlier, the get more credits is the only way to get more, so we'll never just automatically ding you for credits. Once you run out, basically just the functionality won't be there. Teresa's question, can you touch on the LOS tab? Now the LOS tab is only available for certain organizations. What that is it allows you to run an import from your Encompass. Now, Teresa, you do have this tab, but about 90% of the people on this call do not have this tab. It's actually only exclusively available to site license organizations that have made an agreement to allow this LOS transaction. So for that one, I'm sorry, Teresa, I can't show that on the call today. However, but if you have additional questions on that one, I know we've discussed this a little bit through the support box. If you're running into any issues, just let me know, and we'll work on it together. All right, so that's basic settings. Let's get up to the home screen, and I'm going to show you just some basics on how to navigate this part and what it's useful for. Now, if you're just setting up, you probably don't have any goals in here yet, just like I don't, and you can edit your goals by clicking the Edit button here. And what's my desired number of clients? Well, I want 100 clients, so I'm going to hit OK. And you can see it now shows me my client goal versus my actual amount. This just kind of help you track your progress. Now, the goals don't reset. So eventually you want to actually keep improving your goals. So maybe monthly you want to set a goal for yourself. I want 20 more, so you're going to boost this to 120. Now you can do the same thing for your partners. So if I wanted to have 20 partners by the end of this month, I'm going to hit OK. and you can see it now shows me my goal versus the actual. Now, one thing you're going to notice is that it counts these records once. Now, if you've done multiple presentations for a single partner, it's still only going to count that as one partner in here. William's question, how much more money to add LOS? Have someone email me, please. William, it's not available for individual licenses. It's only available for site licenses, and it's one of those things where the sales guys need to talk to your guys, and they all hammer it out. So I don't have specific pricing for you on that, but it is available if we can get a site license going. So I'll email you after the call and see if that might be an option. Site licenses start at 10 originators, so if we can get a group of people together, that might be an option for you. Now, I will tell you, right now, it is exclusive to certain sites. Eventually, we do plan on making this available for everyone. Right now, the reason it's only available for site licenses is that there's certain business rules in Encompass that have to be observed. Otherwise, you can cause some major problems for compliance. So once we nail it down to a point where it's never going to cause you an issue, we'll be able to release that for everybody. All right. So it looks like there's no more questions in the box just yet. So I think we'll finish going over this home screen real quick, and then we'll start on our cash versus mortgage transaction. All right, so we've got recent clients and report tracking. Recent clients is where you're going to live most of the time. This is the one that allows you to actually see all the recent files that you've been working on. And if you wanted to get back into one that you've worked on, all you need to do is double click on it and it'll open the wizard again. Now, report tracking, what this allows you to do is it allows you to track how many times your particular presentations have been viewed. And you can see that my Keep MI in Your Pocket presentation got viewed 143 times. If I was to double click on this, it's not going to take me into the wizard. It's actually going to open up the physical report, so the live report. Now, if you find that you're double clicking on these and trying to get back to the wizard, it's because you're on the wrong tab here. So all you have to do is switch it back to the Recent Clients tab. And then you can double click on these and they will open your presentation. All right, so one more thing you need to be aware of. What if I worked with isn't one of my most recent 10 people here? What if he's a little bit old? I did this last month or something. You can go to View All. And when you click on View All, this is going to give you your checklist. And you can filter it down. So there's a filter up at the very top left here. So if I wanted to find a specific person, say John, I've got a John Barber right here. I've got a John Smith. And each one of these has arrows next to them. Now the reason they have arrows is that if you wanted to do multiple presentations for one person, you can add an analysis under that client rather than create from scratch. And it'll actually stack them in here. So if I did multiple presentations for this person, I see them under my client name here. To open one of these, we click on the report itself and hit Open Analysis. And you can copy these analyses. So if you find that you've done a great presentation and you want to reuse it for other clients, feel free to copy it. All you have to do is, and you're going to choose whether it's going to be a current client or a new client. And it looks like a couple of people are telling me I've got some garbled sound here. Let's see if I can shut anything down on my computer. Able to hear me correctly now? Thank you very much. All right, cool. All right, sorry about the hiccups here. Looks like GoToMeeting is giving me a tough time today. So we'll make sure and get this knocked out. So I'm actually over at Lori's computer right now. So let me close a couple of things down and we'll get it rolling. All right, so as I was discussing, the View All is definitely going to be a help for you. Anytime you need to find a past client, you can always hit View All here, and it's going to allow you to filter your clients. So if I wanted to find specific ones, I can type the first name of that client, or I can even search by the friendly name, which is what this is here. If I wanted to search by purchase, it'll pull everything that has purchase in it. Now, you guys can see here, I've got one called Purchase Templates. Now, I did this a while back actually on a Q&A call to show everybody how they can build templates that they can use going forward. Now these aren't just product templates, these aren't just fee templates. These are full-on scenario templates where you have multiples against each other. And all I do is I basically built these out under one client, and then on each one I can copy this out and make it a brand new client. So if I want to reuse these, I don't want to overwrite the originals, so I'm just going to copy those and make a brand new client out of it. Now, same thing applies on the partner side. If you have multiple presentations for a specific realtor partner, you'd find that there'll be additional entries inside your realtor partners. William's question, is it possible to send these templates to us? It isn't actually, William. There's no way I can actually just import them into your Edge, but I can show you where you can find out how to do this. Let's go back to that Mortgage Coach page real quick, and I will point out the call where I discussed how you can build these guys. And I got the bad smile, or the upside down smiley face from William. Sorry, William, I can't do it all for you, man. You're gonna have to take this one by the horns. So let's get, I'll do a search here. Actually, let's do this. I want to say I called it Purchase Arsenal. There it is. So May 2013, there's a call here where I show you how to create your Purchase Arsenal templates. That's what I was just showing you there, where it's just a bunch of purchase transactions that you can keep copying forward. But you're going to need to create them yourself anyway, because you've got to apply your closing cost fees to them. The fees that I use are unfortunately not going to work for you. All right, so let's get back over into Edge, and let's start discussing a cash versus mortgage transaction. I know Dave has been talking about this a lot on the Tuesday calls, so I want to make sure you guys know how to do this. Now, one thing I will tell you about this type of presentation is when you first look at it, it doesn't look like there's a benefit for the mortgage transaction. And of course, if you're paying cash, you're not paying interest. So one of the things that the Edge total cost analysis really drills down is how much interest you're going to pay. Interest, MI, closing costs. These are the unrecoverable costs of the loan. So when you're comparing a cash versus mortgage scenario, you have to understand that your lower left quadrant of the presentation, it's going to look a little bit negative for the mortgage transaction. But the crux of the presentation is to show how they can develop more net worth and more liquidity using a mortgage. So let's see how this is done. So we'll start off with a brand new client. And I'm actually going to make this a marketing report. Now, the difference between individual reports and marketing reports are that individual reports carry contact information with them, first and last name, property address, and so forth. Whereas marketing reports don't. They just have a report headline, and then it removes the property address. So I'm going to call this one Cash versus Mortgage. And you could probably get a little bit more creative than I was. Let's see. Should I get a mortgage? There we go. So I don't need a home phone for this. This is going to be a marketing presentation that I would probably put on something like Facebook. But I do need to give it a friendly name. And the friendly name here just describes what this report is. You know, it's not a nickname for the client. It's not a nickname for your partner. It's a nickname for the type of presentation this is, so you can identify it when you go to that View All screen. So in this case, I'm going to put this as marketing report for Facebook. That way I know where I sent this, so that when I start getting click alerts on this, I know what kind of traction I'm getting from which channel. Now, this is going to be a new purchase, so I'm going to click the Purchase a New Home goal. Now, that eliminates the questions about the current mortgage. So if you're ever finding that you're preparing presentations, you're getting all the way through, and there's this current mortgage showing up on your report, it's because you haven't checked the Purchase a New Home goal, so the current mortgage hasn't been removed. So all you have to do, come back to this goal screen, check the purchase goal, it'll remove that current mortgage altogether. Now, in refi transactions, don't check this box. You definitely want to have that current mortgage there so that you can show what their current loan scenario is versus their new ones. All right, so the next thing here is there's only one field that you're going to use on purchase transactions here, and this is current property value. Pretty soon this label is actually going to be changed to property value / purchase price, because that's really what it is. So we'll put in our purchase price. Now, the affordability section, we don't have specific information about this borrower. So I'm actually going to leave this blank with one exception. If I do want to show the tax benefit from each scenario, which there is a tax benefit to a mortgage that you're not going to get with cash. So if I want to show tax benefit, I'm going to pop in a tax bracket here. And generally, you want to just kind of assume what tax bracket you're targeting. If it's a $250,000 house, I'm probably targeting either the 25 or 28% tax bracket. Now, if you wanted to see what the actual income levels are for the tax brackets, you click on this little button here, Find Tax Bracket. This opens up another website, and it shows you what the income ranges are for each tax bracket. So $250,000 house, that's probably going to be the 25 or the 28% tax bracket. So I'm going to put 28 in there, just so it makes my presentation look a little bit better. And especially if the person's got a good amount of funds that they could potentially just buy the house outright, they're probably making right around this bracket here, maybe more. All right, so I'll put in my 28%. Now, I will tell you, for those of you who are going to show tax bracket, always make sure to include something in your disclaimer or in the payment notes that says consult your CPA or financial planner for additional details on tax deduction, something like that. Basically, you just don't want to pigeonhole yourself as an expert on something that you're not. So make sure to disclaim yourself. It's just going to help CYA. All right, so mins and maxes, I'm not taking an application, so I'm actually going to skip this part entirely and go straight over to products. Now, there's going to be two products on this presentation. One of them is going to be pay cash. Now, there's going to be no loan amount, so what I'm going to do is for the down payment, I'm going to put the $250 right there. And when I do that, you can see that it makes my base loan amount 0. Now, I'm going to have a lot of zeros in this particular one, so it is going to trigger an exclamation point on my products tab. That's okay. In this particular case, we definitely want empties here. We're having a 0 mortgage. Now, there's going to be no closing costs for that transaction, so we're going to leave those closing costs alone. But we do need to make sure and enter the monthly costs. So they're still going to be responsible for hazard insurance. They're still going to be responsible for property taxes. So we'll put those in there. Now, the next step is to add another product. Now, when you add another product, it's now opened up a second product in the wizard. We can name this one. Let's call it use a mortgage, something like that. You could even call it with a particular mortgage name, like a 30-year fixed or something. But I like to make sure that when I'm using product names here, especially in a marketing scenario, that I indicate what the point is. Why am I showing a 30 fixed next to a pay cash? So let's see. Let's call it something else. Okay, so I ran out of room there. Make your mortgage something. All right. Well, I'll leave that alone. I'll let you guys think about it. There's, got about 15 to 20 characters total that you can put on this product line, but if you expect it to be printed, keep it at 12 characters or less, especially if you have 4 products, because it'll push the products out of view and print. Let's see. Okay, there we go. Make your mortgage work. So we still have a $250 purchase price. Now, my down payment percentage, I'm going to put in 20% because I want to make sure they're not going to pay mortgage insurance. I mean, if they've got the cash to do a 20% down. Hey, Will had a great suggestion, making it with a mortgage. There we go. All right, cool. So we're going to build out our 30 fixed here. This is going to be a 20% down, so there's going to be no MI on it. We can get them a decent interest rate on this one, so let's say about 4.5 on a 30-year term. Also for new users here, term is in months. Make sure you always enter these in months. If you're finding that you've got a $25,000 payment on a $100,000 house, you've probably entered 30 here instead of 360. All right, so closing cost details. Now you have 2 options on the way you want to do this. Now specifically for a marketing report, we don't know the absolute details. But what we can do is we can give ballpark figures here. So if you want to, you can actually just type in your figures into these boxes here. Now that's not going to show any kind of an itemization. It's just going to be totals. So if you want to, you can do it, but I would urge you when you get into Edge, it's going to make your life a lot easier when you start creating fee templates. And the reason you would do that is so you can use this closing cost detail and have it auto-populate for you. So there's my 30-year fixed purchase. And you can see it automatically brought in all my fees for me. They're marked correctly, everything down to my reserves. Now notice that in my templates, I leave my reserves blank. And the reason is there's no way to indicate a multiple in here. So for instance, I know that in your origination system, you would mark this as 2 months. Well, there's no month indicator here, and right now we haven't even gotten to the monthly costs, so Edge doesn't know what the hazard insurance reserves are on this one. So what you do is you literally just calculate it out. If you know they've got hazard insurance of $80 and they've got 2 months of it, you're going to put in $160 there. Taxes reserves, you know they've got 3 months of that and it's $125 or something, you're going to put in your $375. Now once you're done with those, hit apply to loan. And you'll notice it grays out those fields for you. So if you wanted to make additional entries on these fields, you'd have to go back into the closing cost detail and edit the specific line items. Now there are still 2 fields that you can fill out. There's the points field and the prepaid interest days. So I always like to quote prepaid interest on these. If you were charging additional points, you would put those in right here. And then we get to our monthly costs again. So same thing, I'm going to use factor percentages. I like using these especially for estimates because we don't necessarily know exactly what they're going to be until the GFE comes. So another point of disclaimer is make sure your disclaimers or your payment notes say something about hazard insurance and taxes are estimates only and may differ on your GFE. Now, no mortgage insurance, so I'm going to leave that one blank. Now, I've got my scenarios together now. Now, here's the trick to it. As you can see, paying cash, it's saving a bunch of money in interest because they're not paying any interest at all versus what their mortgage is doing. But they do have a difference in terms of what's available on liquidity and what they can do with reinvestments. So I'm going to go into the Adjust Reinvestment Strategy grid. This is where you're going to do all of your reinvestments, whether it's term reduction reinvestments, accumulation reinvestments back into a savings account, or investments into a new investment vehicle, say a 401k, a mutual fund, something like that. Now, what I like to use on the cash versus mortgage is the investment balance area because I want to show different rates of return. I want to show that if they were to pay cash right now, they are going to have $1,000 a month that they can sock back into the bank account every time. But they're going to get a low rate of return on just making monthly contributions versus a large lump sum contribution to a financial vehicle. So what I'm going to do is I'm going to take that monthly expense that they'd otherwise pay with a mortgage, and I'm going to put that right here. So 1013.37 is going to go in every month, and I'm going to say they can get about a 1% rate of return there. And you can see at the 15-year mark, they've amassed $197,000 here. So what do we do on the mortgage side? Now on the mortgage side, they don't have a monthly payment that they can apply to it, but they still have the lump sum because this cost them $250,000 to buy the house, but on the mortgage side, it didn't. It cost them about $200,000. Actually, $195,000 I would say is probably a good item here. So I'm going to take that $195,000 that they have left, and working with my CPA or my financial planner, I'm going to get them to quote me a portfolio rate. At $195,000, what kind of a portfolio can you get me? What kind of a rate of return? And they're going to tell you. They might give you an outlandish figure like 6%, but you can probably get away with 3 to 4%, especially for a marketing report. Now look what this has done over the 15-year span. Because I have a higher rate of return, that lump sum is just going to continue to grow. At the 15-year point, we've got $350,000 in the bank versus on the cash side having only $197,000 in the bank. Now our net worth is going to end up right about the same between these two. The big difference will be the amount of liquidity. So let me trigger a save here, and that's just hitting either of these right or left arrows in Edge will trigger a save for you. And then I'm going to go to net worth. Now check out our net worth. The mortgage actually does have a better net worth here. We've got $25,000 better net worth. Now the difference here is going to be much more visible when we get to the final presentation. So let's finish our wizard here. We'll get to the presentation, and then I will show you what this looks like. Now remember, because it's a marketing report, this contact information, property address stuff doesn't show up, so don't even bother putting it in here. Just go ahead and continue on. And then make sure you've got payment notes. So payments, shown, include estimated taxes and insurance, we'll just say. Consult your CPA for tax deductibility questions. There we go. So now I've covered all my bases there. I'm good. I don't have to worry about that. Now as we continue on through the wizard, you can see that you have additional areas where you can add more verbiage. And I've got a default that says it may include taxes and insurance. This does, so I'm just going to get rid of that part of my verbiage. And if I wanted to make any additional comments about this, say for instance, why am I showing this $50,000 savings here, I might want to qualify that with something using a little bit of verbiage here. But generally what you're going to do is you're going to make sure that you use your video to explain this, because just looking at the report, the net worth is going to make sense, but the borrower is going to look at that short-term area and say, well, why would I bother doing it if it's going to cost me more? Here's why. Last step of this, we want to make sure and put a quote date on it, and then hit Generate Link. Now when you hit Generate Link, this actually goes out to our servers and returns a short link for your report. You can then select this with your mouse, right-click on it and hit copy. Now you can paste this into an email and send it out to your client. But before you send it out, you want to make sure to do add audio video. Now before we do that, I want to show you what the presentation looks like. So I'm going to hit Edge Live. This is the same thing as doing a preview. Now what I want to draw your attention to is, yes, it does cost them, $1,013 more to do it with a mortgage. It is going to cost them over the 5-year period of time, it's going to cost them $35,000 in interest. But look what's happening. Over the net worth in the long term, you can see that our net worth is roughly the same. We've got about $25,000 extra net worth on the mortgage side, but you can see with the color striation exactly how much of that is liquid cash. That's the important part. This is the part where you transition your conversation with this borrower or with this prospect into, look, you've got a couple of different options here. You can buy this house outright, and that's fine. It's just going to cost you your monthly escrows per month, and that's what we're seeing right here. But it is going to cost you $250,000 cash to close, which means we're draining that account. On the mortgage side, it's only going to cost you $55,000 to close. So we're only going to take a little bit out of that account, and we're going to allow it to continue to grow. And if we go into the more info section here and go to our reinvestment strategy, we can actually highlight figures like this, showing the new investment balance, showing that rate of return, and what that's going to look like at the 15-year point. And I'd highlight all these just so they can see what each side looks like. Now, very bottom here, and by the way, I'm highlighting by just left-clicking on the cells, and it either bolds them if they're in a color-shaded area, or it'll highlight them if they're in a white area. But I would definitely leave these ones highlighted so that the borrower can see the difference here. $350,000 versus just short of $200,000. That's a pretty big return on the investment. And when we pop out the more info section on the lower right, you've also got additional areas you want to draw their attention to. These are those investment balances we were just looking at. And we've got a pretty significant difference in tax benefit. You can see we've got $30,000 more tax benefit over the 15-year point because we're paying interest on that mortgage. So let's take this down and make them equal. So we'll put these both at 5 years and see what it looks like. So I'm going to hit Close inside Edge. I'm going to go to my analysis screen. And I'm going to make my long-term 5 years. Now my Edge report, the live report, automatically updates. It's dynamic. So whatever you do inside Edge, it's automatically going to update your live presentation within a few seconds. So you can see it just updated, and now it's showing net worth in 5 years. Now check this out. They're both almost exactly the same net worth, but look how much is liquid here versus this other one on the left. We've got very little liquidity, which means this starts the conversation about going into an investment property in a couple of years, or maybe they've got retirement plans that they're trying to work on. Maybe they've got a kid going to school. Either way, this mortgage option allows them to use the money they have instead of tying it up in equity. And as you guys know, equity is fleeting. If all of a sudden housing prices drop, what happens to that equity? It could potentially be going away. So the liquidity here, obviously, if it's a 401k or something like that, you're aware that that can drop as well. You can stop getting a return on it. You can start losing on it. But the whole idea behind this is you have the money that you can move immediately without having to sell a house or refinance it to get that equity out of it. All right. So the last part here is make sure you do a video about it. So I'm going to go back to that last screen in Edge, and I'm going to just hover over the presentation button here. And you can see it pops up jump buttons right here. So I can go to the very last screen, and then I can hit Generate Link again. Teresa had a question real quick, and I will address that in just a second. She was asking, why is the making it with a mortgage option not showing on the report? So let's go to Add Audio Video, because this is going to also show a preview of the presentation. So what she's asking is, why is there no graphic here? The reason is the top right quadrant and the bottom left quadrant are comparisons. So one of these options is always going to be used as the benchmark for comparison. Now what this means is that the pay cash is going to save you $35,000 in interest versus this mortgage option. The pay cash is going to save you $1,013 a month versus this mortgage option. So there's always going to be one that's going to have an empty graph on it. Now you can alter which one is being used as the benchmark for comparison depending on how you want to present this to your client. In order to do that, go back to the analysis screen and you'll see that there's two different benchmarks you can choose from. So if I wanted to make pay cash the benchmark, watch what it does with the graphs. It's now showing it costs you $1,000 more to do the mortgage. If I want to do that for the short term, I can do it as well. It's going to cost you $35,000 in interest over the 5-year period of time. But our net worth here, while it's relatively close, and it has cost us a little bit more interest in order to retain this, we've got huge liquidity. All right, so let's see what that looks like on the presentation again. So now that I've altered those benchmarks, you can see that these ones are now showing negatives, and we can see what our striation is between the liquid asset and the equity. Now at this point, you can see I've got new buttons down at the very bottom here. I've got a record message button, and I've got a clear all button. Now the record message button is the one you're going to use, but if you're doing your first video, you've got to do a little bit of setup first. What you're going to do is anywhere on this presentation, right-click on the report, click on Settings. You're going to go through each one of these tabs and just make sure that it's set up to recognize your camera. So for the first tab, Enable Hardware Acceleration, go ahead and leave that checkbox checked. If you find that you're getting weird green lines through your video for some reason, or your computer is an Apple IIe from the Stone Age, you probably want to uncheck this hardware acceleration box. But I imagine most of you have computers that are, within the last 6 or 7 years, so your video cards are more than capable of doing this. Now the second one, you want to make sure and click Allow, and remember, this is just going to make it so Edge doesn't have to ask you every single time you use your video recorder if it's okay to do so. Now you've got a folder option for how much local storage. You really don't need to change this. It doesn't make a whole lot of difference either way, so I usually just leave it right in the middle there. Now the microphone, you can see that you have a couple of options in here if you have more than one microphone attached to your machine. Now, as you can see, I'm actually on a headset right now talking to you, but I've got the LifeCam webcam actually plugged into my machine, and it has a microphone on it. So if I wanted to use the mic that's attached to that, I would make sure to select that device. Then, of course, the webcam. Make sure to select the webcam if you have more than one. For instance, on my other machine, it's a laptop. So as I'm looking at my webcams on that machine, I see my internal webcam that's built into the laptop, but I don't want to use that one. I wanted to use the one that's plugged into my USB ports, in which case all I would do is make sure to select the appropriate one using this drop-down box. Now, once you've got this done, you're ready to record. So now it's just a matter of hitting Record Message. And there we go. You guys should be seeing me in here. Hi, everybody. So when you're doing your message recordings, a couple of quick tips on just placement, lighting, all that kind of good stuff. With your webcam, you never want to have it below your screen to where it's looking up at you. You can see that if I put it right here, you're kind of looking at my nose. Just be cognizant of that. You don't want to have that happen. Try and put it above your monitor. It is also helpful for the position you're taking. You're kind of talking up to the person rather than talking down at them. It tends to be a lot better received. Another thing you can take note of is your background. What's behind you? If you've got a bunch of posters and stuff, or whatever you've got going on your wall, you might want to try and redress that a little bit. If you've got a giant window behind you, close the blinds, close the drapes. A bunch of light coming in behind you is going to flood you out a little bit, and it's just going to look a little weird. If you're finding that you've got too much overhead light, you can actually put a little post-it note, kind of like the brim of my hat. You're going to put that just above your webcam so it stops a little bit of the light on top from hitting the webcam. If you're finding that you're washed out and looking really, really white on the webcam, unless you're like me who's actually really, really white, you'd want to make sure and put that little post-it note on the top so that it tunes out any of that additional light. Now, when you're ready to record, shut off your phone. Shut off your email alerts, shut off your ringers, just make sure there's going to be nothing that's going to interrupt you. Shut off Skype. Skype is my #1 problem with recording. Make sure there's nothing that's going to interrupt you in the middle of your recording, because there's nothing worse than getting halfway through a great recording and something pops up and just completely kills your recording. Don't want that to happen. And once you're ready to record, make sure that you look okay. If you have to move your webcam around a little bit to make sure you're centered, go ahead and do so. But most critical part of this is when you're actually recording, keep your eye contact with the camera. That's you looking at your client. So if you drop your head and you're looking around at your desk and talking about the figures that you've got on your yellow pad, which you're not supposed to be using, they're going to see that. So keep it in mind and make sure to look at your camera while you're recording. Now, when you're ready to record, drag your video window up to the very top of the screen. Now, the reason I do this is so that I can keep my eyes on that camera just in case I have to look away for some reason. But you can use this record button right here to start and stop your recording. Now, what that means is that when you're ready to record, you're going to hit record. It's going to tell you you're recording. And then when you're done recording, you're going to hit the stop button, or you can just leave your mouse where it is and click on the record button again. And it's, as soon as you hit that record button again, it's recorded. It's appended to your presentation. So this link that we had back inside Edge, once you send that out to your client, it automatically has the video attached to it. So if I was to just copy this, paste it into an email to my client, send it out, when they click on this from a browser, it's automatically going to pop up the presentation. They'll see my shining face talking to them, and they'll be able to see the whole video. So that's great for Facebook posts and so forth. Now, one other thing to be aware of is that people are often going to open this on their mobile devices. Now, when they do that, if it's an Android device or an iOS device, it's going to take them to the appropriate app store to download the Viewer app. Now, the Mortgage Coach app is just a viewer. It doesn't allow them to do any data entry. All it does is make it so that any platform that they try to click it from, they can still view your presentation. Now, some of you may be aware on mobile devices, especially iOS devices, they don't allow Flash, and Edge is built in Flash. So the actual presentation right here that we're looking at, let me trash that real quick, make sure and get rid of that. And let me go to full screen for a second. Well, the actual presentation that we're looking at right here is it's done in Flash, and you can tell because when you right-click on it, you can see Flash Player settings there. Flash doesn't work on iOS devices at all. So Adobe and Apple have been fighting over this for years. It's not going to come to a head anywhere anytime soon. Flash will probably never be allowed on iOS devices. So that's why we built a mobile app, so that when your client clicks on the link, it takes them to the App Store. They download the app. Then they can click on your link again, or they can type in your link inside the app, and it'll automatically open that presentation for them in a rich mobile experience. So that works on iPads, iPhones, any Android device. It's just going to route them to the right store. They'll download it. They'll install it. Then they can view your presentations. Now, this is also very helpful for when you're working with realtor partners. Anytime you've got a couple of partners, or even just one partner that you're corresponding with over a couple of loan deals, you want to make sure that you get your partner to install the mobile app. Now, the reason for this is that when they're out in the field, they need to be able to show prospective borrowers, prospective clients of theirs, what kind of mortgage advice can be offered with your partnership with them. What better way to do that than on their iPad? So the easy way to do it is generate a few presentations that you really, really like for marketing. One, this cash versus mortgage. And it shows them, it's obviously better off doing a mortgage over the long term for liquidity. But you also want to do something like a cost of waiting strategy. Show them what happens if they buy right now versus waiting for a couple of months and rates potentially going up. You want to have an open house flyer with your co-branded presentation with that realtor partner, and then maybe just some general purchase options. But the whole idea behind this is once you have your realtor partner install the app, send them an email or send them a text that has those 4 presentations in it so that they can immediately just open their email, click on the presentation that they want to see, it'll open the app, and they have it at their fingertips. So they don't have to search around for it. They've just got a list of 4 different presentations that you want shown when they're doing their presentations for their clients. And the great part is you've got video, so you can cross-sell that realtor partner the entire time. Obviously these are marketing presentations, these particular ones, but if you're crafting some that are for a specific realtor partner, you probably want to do something like what I did with those purchase templates, which is when you create a new partner, or actually let's find one that I have already. So Joe Realtor, for instance, if I wanted to create a bunch of different options for this one, maybe I wanted to create an open house flyer and a seller buy down flyer for this, what I would do is make sure to use the friendly name to indicate what it is, whether it's going to be an open house or it's going to be a seller buy down. And then when you get to the analysis screen, do copy analysis and copy it under the current partner. That's how you get those grouping levels that I showed you earlier. So if I copy into the current partner, I'm going to have an additional presentation under this partner. I can then have a separate link for that presentation and a separate video. William's question, can they see the video on the iPhone? Absolutely, William, they can. They do have to download the app in order to be able to see it. But I will tell you that it does take a little while for the video to translate over to iOS. When you're recording it in the browser, it's available immediately. But in order to get it over to the mobile devices, we actually have to convert the video and re-encode it so that it'll work on those mobile devices. That can take about 30 minutes, so just keep that in mind. If you do a video and then you try and open it on your iPhone and you're finding the video's not there yet, it's still encoding. So it might take a little bit of time, but it definitely will work for you. And of course, if you run into any problems with it, shoot us a note over to support. We'll check it out. Thanks, William, for the follow-up. He says, got it and video worked. Had tried it and it took time. Got it. Awesome. All right, great. Thanks, William. All right, so I know we're getting close to the end here. Today we've discussed cash versus mortgage. We've discussed a little bit about video recording, but let's go into a little bit more depth on reinvestment strategies. So what I'm going to do is I'm actually going to open a new client, and I'm going to make this a marketing report for refis. And the whole idea behind this is, obviously I don't have a specific client in mind, but I want to be able to show maybe the median in my area. You know, if the houses around me are generally going between the $250,000 to $300,000 range, I'd want to pick a price range right in there. You know, if you're in a high-end area where it's all jumbos, pick a jumbo product and show a refinance against it. But the whole idea behind this is you want to show them that there's more options besides just refinancing. They can make those savings work for them. So my friendly name here is, you know, wherever I'm going to post this marketing presentation to. Let's say LinkedIn. Now for this one, since it's going to be a refinance, I'm going to choose one of the refi goals. So let's say lower interest rate. Now current mortgage amounts here, I'm going to put in my current property value, and let's say I went with $300,000. The original appraised value and current total payoff amount, you would use these for specific borrower transactions where you know this information, but for a marketing report, you're not going to know this. I mean, it's really just a guesstimate on an average of your area. So go ahead and leave those empty. You don't have to do anything with those. Now we do need to fill out a current mortgage. So you want to think about what type of mortgage you want to target in this case. You know, at what point in the past do you know that your clients had pretty high rates, and if they're still stuck in there, they can benefit from a refinance? Or, you know, maybe they've lost equity over time, and a refinance is the only option, maybe a HARP refinance or something. For this case, I'm going to assume they took out the mortgage in 2008, or 2009 actually. So we're going to talk about right after the meltdown. And they took it out for, let's say, $235. And at that point, they probably had about 5.75 interest rate on a 30-year term. Now, Edge automatically calculates what the remaining balance would be based on that amortization. So I can edit this if I want, but for marketing report, I'm just going to accept what Edge says here. Now, it does show you the P&I payment down at the bottom, so you can verify. But that's just in case when you're doing a refinance, if you don't know one of the variables up here and you're doing it for a specific client. Say, for instance, my client has told me that they're paying $1,400. I'm close, but I'm not absolutely right here. So in order to get my P&I payment to $1,400, I would just start playing with this original loan amount until I get it to the right place. So let's see what 240 does. There we go, right on the mark. So all I would have to do there is, since my client would know their remaining balance, I can overwrite the remaining balance with whatever it actually is. But you can see how I was easily able, and that was pretty lucky actually, but I was easily able to get the right P&I payment there by making a simple change in the original loan amount. All right, so now we're going to pop in just some estimated hazard insurance and taxes. Oops, that's too high here. And if they did have mortgage insurance, we could put that in. There's actually a good argument for putting mortgage insurance in here if you wanted to show a mortgage like that. But if we're talking about 2009, they might be out of it already. If they're still responsible for it, obviously a refi out of MI is a great presentation to show. But for this particular one, I'm not going to include mortgage insurance here. Now remember, we don't have specific borrower information, but the only thing is if I want to show tax benefit, I can show it right here. Now when you're doing a refinance, going from a high interest rate to a lower interest rate, you're going to have less of a benefit. So it's up to you on whether you want to show this here. It's basically based on the amount of interest they're paying. So with a higher rate, they're going to have a little bit more interest, which means they're going to have a greater tax benefit. But for transparency, always a good idea. So now I'm going to get into my new refi transaction. Call it refi today. Oops, got to spell that right. There we go. Now there's a really easy way to do this so that you can ensure that your cash to close comes out right. Toggle the refi switch to yes. It automatically brings in that base or that current remaining balance from their existing mortgage as the new base loan amount here. If I didn't enter any closing costs at all right now, this would be a zero cash to close transaction. I have exactly enough in my loan amount to pay off the current payoff. So we'll put in the rate that we can get them right now. We'll say 4.5 and a 360 term. We're going to plug in our templates. So I'll pull down a refi template. And if you needed to make any mods to these, I mean, feel free to do so. Again, it's a marketing report, so I wouldn't be too worried about exactly what the figures are here. Just understand that it's an education for your clients. So if they're able to see these figures and they see the itemization here, it's just that additional level of transparency that they're not going to get from anybody else short of a GFE. And even the GFE is a little confusing now, so you're giving them a bit more by showing them this. So I'm going to save that to, or I'm going to apply this to the loan, and then I'm going to move over to my monthly costs. Pop those in there and check out our LTV. We're at 74 on the current, 76 on the new refi, and that's only because this part hasn't come into play. Let's see where we're at here. There we go. So what we're looking at is we're still below the 78% mark. We know that MI is definitely not going to be a problem here, so we don't have to worry about it. But we're saving them money every month. Now this is where we get into the reinvestment strategy grid. So I'm only going to show these two products against each other. Now you can see here immediately that by refining today, I'm saving them $242. Over the 5-year period of time, I'm saving them $4,300 in interest after they've already recouped their closing costs. So let me explain this short-term area real quick for you brand new users. The short-term area is just comparing the unrecoverable costs between each of the loan programs. These costs are interest, mortgage insurance, and closing costs. We don't include the prepaid escrows in here because they're not viewed as cost of doing the loan. So what this means is that in order to show a savings for your new loan, it has to save enough interest in MI to overcome the closing costs they had to pay. So this is savings above and beyond the break-even point. I know a lot of you hear that phrase thrown around. There's a couple of different ways to show break-even. Break-even could be, when do you break even on your closing costs, which is what I'm showing here. There's other types of break-evens that you'll hear in the market where you're breaking even on your equity. That's a little more difficult to show, but it's possible. You can show it in the total net worth area. Just so you can see where their amortization comes back into play. Now that would really be more of a discussion for doing term reduction payments. So principal reduction payments every month. How long does it take them to square out their equity so that it matches the amortization they were initially on? A little bit more detail on that one. I wouldn't worry about that too much, but I just wanted to give you an idea that you will hear it a couple of different ways out there. Now the one we're focusing on is where do you break even on your closing costs, and you can see that if we wanted to find the actual break-even point on this new loan, I'm going to start at 12 months here, and you can see that I've got a savings on the current mortgage because I have not broken even using my interest yet on this new mortgage. I have closing costs that have not been overcome. So what does it look like at 24 months? We're getting closer. How about 26? Very close. Let's try 28. There we go. So you know that you've broken even once this graph shifts from one to the other. The current mortgage is now the most costly mortgage for this time frame. So I think even we might be able to get away with 27 months. Let's see. Yeah. So at month 27, I have saved enough interest on this particular mortgage to overcome the closing costs that I had to pay to do it. That's a pretty good break even there, 27 months. Now it can get even faster. Let's go into our reinvestment grid. Now remember, we still have that $242 that we can reinvest in any way we choose here. Now for a marketing presentation, you kind of have to determine which goal you're looking to satisfy here. So if you're targeting people that originally took the mortgage out in 2009 and happen to still have it, one of the reasons that you're doing this is you want to show them a cost savings. But remember, because they're so far into the amortization schedule already, that interest has started to slide down a little bit. As you guys are aware, in an amortization, the first monthly payment is going to be the payment they pay the most interest on. As that goes over time, the interest level goes down and the amount of principal goes up. So right around the 10-year point, they start trucking the other way, which means they're paying more principal than interest. So if you find that somebody's in a loan after the 10-year point, it's going to be a really tough sell because you're restarting them in the amortization. So unless you're giving them a great rate that's saving them a ton of money per month, it's going to be a tough one. Now in this case, they've got 5 years left on it, so they haven't gotten to that point where they're paying more principal than interest. We can still make this one work for them. Now there's a couple of different ways I can reinvest this money. One is I can just take this monthly amount and put it straight back into principal every month. Now when you do that, you can see it's now reduced my freedom point on the new loan to 21.17 years. So I'm paying off this new loan 3 years faster than I would have paid off the current mortgage. Now what does that do for their interest savings? Right now it's showing $7. When we come back in, after that reinvestment's been applied, it's showing a $243 savings. So they actually will have broken even maybe a month or two earlier. So it looks like a month earlier. By doing that reinvestment, they're going to break even a month earlier on their closing costs. But the long-term ramifications of doing that are they pay it off early, and they're going to save a little bit more incremental interest over time because as they're making additional payments, they're shaving off the months on the end of the amortization, which means they're not responsible for that interest. That is what you're looking for. So that's one strategy. We can tell them, here's what happens when you apply it all straight back into the principal every month. Okay, let's try another one. Instead of principal reduction, let's put it into an investment account. So let's say our 241.80, and let's say that we can get them a 3% rate of return. Now when we hit OK here, you can see that we still got the $86 savings, but when I come back in, it's shifted again. And the reason it is shifted is because I'm no longer applying that savings into the loan, I'm applying it into an external vehicle. And that's where this comes into play. The net worth is a combination of their total equity plus their liquid asset at this period of time. Now in this case I've chosen a 15-year period. So let's take a look at just 5 years and 5 years. So a 5-year period of time on both of these. Our net worth is higher on the new mortgage, and this is without doing term reduction payments. This is payments to an external vehicle. And we're still saving them interest. So my cumulative savings for these, I'm really going to combine my net worth difference and my interest difference here. So I'm looking at $6,000 difference in net worth and $4,000 in less interest, which means I'm saving them 10 grand over 5 years. That's pretty phenomenal. All right, so those are the two main options, using a principal reduction payment or using an investment vehicle. Now the reason I didn't put this in savings is because you would only do this for a specific borrower. When you go into the affordability screen, there's an area that you can enter their current savings balance and their current savings rate of return. What happens is when you put those in, it automatically populates those into the fields right here. The cash to close is removed from that savings and it gives them a new adjusted savings start. That's going to continue growing, and you'll see what that looks like at the 5-year point. Now you can also take that monthly savings and put it back into their savings account instead of an investment vehicle. But the reason I chose the investment vehicle is because I didn't put anything in the affordability section, so this part's all blank. All right, so one other option here. What if I wanted to split it up? What if I know that because I have $242 to spend, I want to put $100 into principal reduction. Actually, let's make it so it pays off in the exact same amount of time as their current mortgage, because that'll be a good selling point for me. And looks like 120 is the ticket. Okay, so when I'm discussing this with my client, I'm going to tell them that I'm going to save you $242. You're going to take 120 of that every month and put it straight back into the principal, and you will pay off your new mortgage slightly faster than you would have paid off your existing one. Okay, that's great. But what do we do with the additional? And we've still got 121.80 here. So I'll put that one right here. And when you put that in, you can see what it does. Now they've got an $8,000 investment at the 5-year point. So if we were to look at this as the full term for each of the loans, meaning I push these long term out to 30 years, and I'm going to trigger a save real quick and come back, you can see that my net worth is substantially higher here. You know, I've saved them Now, a good amount of money over the 5-year span, but let's look at 360 months. So I've saved them $30,000 in interest, plus their net worth is, $60,000 higher, $70,000 higher actually. If we want to just look at the total interest in MI over the long term, there's a pretty significant difference here. And if we just look at total principal paid, they're both going to end up being paid off at the 30-year point, so it's inconsequential. So our real metrics here are going to be total net worth or total interest in MI paid. But when you're developing a liquid asset like I've shown here in the reinvestment strategy, I like to show net worth because that's total equity plus the liquid asset. All right, so 3 different ways of doing reinvestment strategies, and you can use them all together, and it's okay. One more thing I want to show you. There's this cool little checkbox at the very bottom of the presentation here in the reinvestment grid that allows you to pay off the first lien with the accumulated balance once it reaches the point where it's enough to pay it off. Watch what happens. When I check this box, you can see that I'm now paying it off in 21.58 years. Because these two are working together, I'm showing a principal reduction payment that's reducing their balance, and I've been accumulating this, this monthly figure here. At 21.58 years, I'll have enough in that investment account to pay off the note. I'm done with it. Then I can continue accumulating. So my investment balance at 30 years, almost $15,000 after I've paid off my note. You can even take it a step further. If I know that at 21.58 years I'm going to have this note paid off, I've got the full mortgage payment, $1,588, that I can sock back into that account instead of just $121. So how do I do that? How do I schedule it to happen later? Double click on these. Anyone that has a blue border around it means you can customize it. So you can double click on this and you can see that you now have a grid. So starting at month 1, I'm going to have 121.80. And let's see. Where was that? 21.58 years. And let's see if I have a calculator on me. Okay, so at month 258 is where this is going to happen. So I'm going to add an additional line item. And I'm going to make it month 258. And I'm going to take that entire amount, $1,588.77. Now what this has indicated is that at month 1 I'm starting with $121.80 going into that account. It's going to continue $121 every single month until it gets to month 258. At month 258 it's going to change over to being this $1,588 payment, and it's going to continue on from there. Now if you wanted to show lump sum payments in here, which I do get this question quite often, let's say they know that they're going to come into let me get back in there. Let's say they know they're going to come into a good chunk of money at month 60 or something like that. I can add a line item. I'm going to put it at month 60, and let's say that that's a $30,000. I don't know, maybe they're getting something from a relative or something like that. Now if I'm going to do that, I need to make sure, if I want to make this a one-time payment, because right now it would assume $30,000 every month from month 60 to 258. So if I want to assume that this is going to cut off, it's only going to happen one time, I need to add an additional line item for month 61 and make it 0. Now let's check it out. So what I'm showing here now is at month 121, or I'm sorry, month 1, we've got a 128 or 121 investment. That's going to continue going until month 60, where they have a one-time $30,000 payment going towards it. And then at month 61, actually I need to put 121.80 here again because I want it to revert to where it was. William's question is, should it be 258 or 259 so not to cut too close to that month? Great question, William. So as I'm looking at this, you're absolutely right. It's actually 258.9, so you're right. I should have used month 259 here. Oops, I got rid of my balances there. That was weird. And this was going to be 1588.77. All right, there we go. Now when you hit OK there and hit OK here, I'm going to trigger a save. I'm going to jump back over to that reinvestment grid because I want to see what I have. At the 30-year point now, I've got $190,000 in the bank, and that's just from doing the monthly reinvestment that eventually I put in a good-sized investment as a lump sum. Then once the mortgage was paid off, I attributed that entire mortgage payment as going back into this investment vehicle. So even after paying off the mortgage, they've got $190,000 in the bank at the 30-year point. So great idea to show financial planners, especially, I mean, if you're going to show them this kind of detail, you got to make sure that when you prepare your presentation, you show them this. So when we go into our reinvestment grid, you're going to show them this, and you're going to have them hit custom, and they see this exact payment scheme that you had created. They see exactly what happened here. Starts at 1, then you've got this lump sum, then it goes back to this this payment, which is the difference between the mortgages. Then once it's paid off, we're socking all that money into the bank for the rest of the term. Now what's really cool is you can go beyond 30 years if you want. What's it going to look like at the 40-year point? And we'll wait till this shows up as 40 years, and then I'll go back into that reinvestment grid. So there we go. So now if we go back, you can see that at the 40-year point, they'd have $478,000 in that account, just from continuing on, basically using the money they're already shelling out of their pocket to put it back into their mortgage and pay it off faster. So, and you can see our freedom point actually even dropped further because of that $30,000 lump sum payment I put in there. So I would probably start attributing that that full payment a little bit earlier in the schedule, and this would generate even more of an investment. All right, so with that said, it's about 10:15. I think I'm going to go ahead and call it for the day. I don't see any further questions in the box, but please do shoot us a note over at support@mortgagecoach.com if you have any questions, concerns. We did record this event, so it will be available up in our coaching call archive by the end of the day today. So if you'd like a link to that, just shoot us a note at support. We'll send you the link. All right, thank you very much. Have a wonderful day, everybody, and I hope to see you next week.